Holy smokes! The rumors are leaking out of Brussels. And if they are true, we are looking at the financial endgame. Reports suggest that the European Union is threatening to pull the nuclear option. They are threatening to dump $2.3 trillion worth of U.S. Treasuries. Why? According to insiders, this is a direct threat to Washington if Trump pushes a peace deal in Ukraine that abandons Europe. Brussels dumps the debt. This isn't just a diplomatic dispute. This is financial warfare. And could this already be happening right now? As I record this, U.S. Treasury yields are spiking. Why? Because there are no buyers left in the U.S. Treasury markets. Japan, the largest holder in the world, is already selling to save the yen. China has been selling for years. And now, if Europe joins the sell-off, if trade tensions continue to unwind, who is left to buy American debt? Nobody. We are watching the yield on the 10-year Treasury go vertical. Interest payments on U.S. debt are already approaching $1 trillion a year. That is 20% of all U.S. tax revenue. This could cause their interest costs to go up by hundreds of billions of dollars overnight. The world is standing on the edge of a financial bomb, and the fuse has already been lit. Let's not waste any time. Let's get straight into the news, the facts, and the data. We need to look at the math, because the math doesn't lie. Everyone talks about China dumping debt, but Europe's position is bigger, much bigger. Let's break down the European arsenal. The United Kingdom holds $722 billion. Luxembourg holds $420 billion. Belgium holds $370 billion. Ireland holds $330 billion. When you add it all up, the EU bloc holds $2.3 trillion of U.S. treasuries. For 80 years, this debt was the glue of the transatlantic alliance. Europe recycled its trade surplus into U.S. treasuries, and in return, America provided security. But now, both sides are rewriting the rules. The relationship is deteriorating more and more every single day. This $2.3 trillion pile of paper has turned from an asset into a weapon. And here is the scariest part. This is happening exactly at the moment the Japanese yen carry trade is unwinding. Japan holds over $1 trillion. They are forced to sell U.S. bonds to prop up their own crashing currency. So you have Japan selling on one side, and now you have the threat of Europe selling on the other side. It is a double pincer movement against the U.S. dollar. So what happens if they actually act on this threat? This is where we enter the realm of MAD, mutually assured destruction. Imagine this scenario. The EU officials whisper the order behind closed doors. They dump $500 billion in treasuries on a Monday morning. The bond market freezes instantly. The 10-year yield spikes 200 basis points. That is 2%. What does that mean for you? It means mortgage rates in the U.S. jump to 10% or 12%. The U.S. housing market freezes instantly. Credit cards, auto loans, business loans, they all explode. Federal Reserve interest payments would explode past $1.5 trillion per year. A shockwave would hit every corner of the global economy. But here is the twist nobody is talking about. Europe cannot pull the trigger without blowing itself up. European banks are structurally short dollars. They survive by using U.S. treasuries as collateral to borrow dollars in the repo market. If they dump the treasuries, the value of their collateral crashes. If they lose their collateral, they cannot borrow dollars. Within 72 hours, dollar funding for European banks would dry up. We would see bank freezes in Frankfurt, Paris, and London. The ECB would panic. They would need swap lines from the Federal Reserve to survive. But what happens during a financial war? One phone call from Washington shuts those lines off. So this isn't just leverage, it is a suicide pact. So is this a bluff, or is the move already beginning? We need to watch the data closely. The fight is over 210 billion euros of frozen Russian assets. Washington wants to seize that money to fund the war. Europe wants to keep it untouchable to use as leverage. For the first time in 80 years, the transatlantic financial compact is cracking. And look at the markets today. The Federal Reserve is signaling they want to cut interest rates. Normally, when the Fed cuts rates, bond yields should fall, stocks should rise. But look at what is actually happening. Yields are rising, stocks are falling. Why? Because the bond market knows something the stock market doesn't. Bond investors are dumping paper. Someone is selling. The term premium is rising. The market is pricing in a failed bond auction. This brings us to the most dangerous moment, Q1 2026. We need to watch the TIC data, Treasury International Capital data. If foreign holdings fall more than 5% quarter over quarter, then we know the bluff is over, the fuse is burning, and the end of the old world won't be a world war with tanks and missiles. It will be a failed bond auction, the quiet moment where the yields spike and the system breaks. The global financial order is being rewritten right now. Every single country is crippled by debt. So instead of holding foreign assets, countries are scrambling to do what is in their own best interests. They are selling foreign debt to invest in their own survival. In the past, the U.S. could sell its debt easily, but with Moody's threatening to downgrade the U.S. credit rating again, with an unprecedented spending spree that neither Democrats nor Republicans want to stop, who is left to buy the debt? There is only one buyer left, the Federal Reserve. I believe the Fed is about to make a historic pivot. Today or very soon, they will likely announce the end of quantitative tightening. They cannot sell bonds anymore. They have to become the buyer of last resort. They will have to fire up the money printers again. They will have to implement yield curve control like Japan. They will print trillions of fresh dollars to soak up the supply that Europe and Japan are dumping. And what does that lead to? We know the answer. We saw it in 2020. It leads to more of the same. House prices double. Groceries skyrocket. Disposable incomes collapse. It is the devaluation of the currency to save the bond market. They will choose inflation over default every single time. So, knowing this, knowing that the fuse is lit, what can we do to protect ourselves? What do the insiders and the major banks know that we don't? Look at what they are doing. They are flooding into gold and silver. Why? Because no matter what happened throughout every financial crisis in history, people always rush to the safe haven asset. Gold and silver have stood the test of time. They survive no matter what fiat currency has risen or fallen. They survive no matter what empire has risen or fallen. Silver is already the best performing asset of 2025. If Europe dumps the debt and the Fed prints money to buy it, the dollar loses purchasing power, and precious metals prices go vertical. The threat from Europe is the signal. The bond market is the battlefield. And in this war, the only winning move is to hold real assets that cannot be printed and cannot be defaulted on. But everyone, what do you think about this? Do you think the EU would do the unthinkable? Would they risk mutual destruction to send a message? Let me know down below. For my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next one.